All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market bias update report for Sunday, November 10th. As always, looking at the previous trading week, you can see here ended up having 13 winning trades, 7 losing trades for a grand total of $15,714 worth of gains. Here you can see the 6 losses and 10 wins that I had on the futures chart. Also had 4 trades in options and stock with 3 wins and 1 loss. So the total for stock and option was negative 186. Total for futures was 15,900. And again, total for the trading week, positive 15,714. Continuing to smash Bitcoin super heavily on this big movement that it has had recently. Also took a trade in copper futures and crude light futures. Crude light didn't end up panning out how I wanted it to, but that's all right. It ended up being okay. Looking out to the trading week ahead. Let's dive right in. Looking at the S&P 500, obviously elections are behind us now. We have Trump as our victor, and the market did celebrate that. We got the news basically on the 5th and 6th here, saw a big rally pushing to new all-time highs. And then after these two big candles, these are what are called Maribozu candles. Maribozu, basically, a candle that is called a Maribozu candle is one that opens at the very lowest price and closes at the very highest price for a bullish one, or opposite for a bearish one where it opens and moves the same direction until close. Basically, that is a momentum candle. If the lowest price on a bullish candle is the opening price, it means price really just drove one direction the entire time. Bulls remained in control, right? That is the story that that candle is telling us. Now we've seen the last 3 days of trading has had lower volatility, smaller ranges. So we are starting to exacerbate that sell. And we are likely going to see at least some profit taking here. I would not be shocked to see this come back down and retest this horizontal support level somewhere just above 5,900. So that is kind of my read on the S&P going into this week. I am not interested in chasing this bullish momentum anymore. I think it needs at least some time to go sideways and let these moving averages catch up, or more likely, in my estimation, is a slight pullback and a flag back down into the rising 9 EMA. Going out to the Nasdaq, very similar picture. Moved to all-time highs, had a couple of big momentum candles, and then now it is simmered out Friday and today's open here on Sunday. We are pushing a new all-time high on the Nasdaq as well. And honestly, again, very similar story. We have a little bit of horizontal support just underneath, right around 20,000 or 20,000. 975 somewhere there. Let's just call it 21,000. So would not be surprised to see this shave a few hundred points, come back down into that range and just hold that level and go sideways for a little while. So again, in the Nasdaq, just like the S&P, not interested in chasing to the upside this coming week. Going out to the Russell. Russell had a little bit different story here. So we had these big momentum candles. And if you remember a few weeks back, I had been calling for a catch-up trade in the Russell, because while the Nasdaq and the S&P had already been pushing all-time highs, the all-time high for the Russell 2000 is actually still overhead at 2460. So we are pushing into that. We are pretty dang close, just about 30 points away from clipping an all-time high. But when I had called for that, we were back down in this range earlier in the year. And then again, after the sell-off down into the weekly 50, I basically said, hey, I still think that there is catch-up for this area of the market. We are finally getting that. And unfortunately, it was such a voracious move. It was pretty hard to catch on the election news. Now we are overextended a little bit, too hard to chase, dropping back into the daily chart here. Even though we are breaking out of a little high base here, I am not super interested in this. I think that we are going to find that resistance up at 2460 at the all-time high and probably chill there. So anything between the all-time high of 2460 and then down to the lower end of this consolidation for the high base, let's just call that right around 2400. I am guessing price is probably going to remain in that range, and hopefully it will go sideways or pull back a little bit and reset this chart, give us an opportunity to play a secondary pattern. Going out to the Dow Jones. This one looks fairly similar. Again, big candles, a little bit of a high base, consolidating within the range, rinse and repeat the same analysis that we had for the S&P and the Nasdaq. Going out to the Bitcoin. Bitcoin has been a juggernaut. It has officially woken up, broken all-time highs. If we toss this out to a weekly chart, we can see previous all-time high was right here on 311 after a giant exponential move, consolidated, chilled out for a long time, about 6 months, and we have now officially broken that. And what that means is now on a daily chart, we are officially bullish, setting higher pivot highs and higher pivot lows. If we go out to that weekly chart, we have set higher pivot high, higher pivot low. Now we have broken that for a new higher pivot high. So we are bullish uptrend on the weekly chart. And if we drop this out to a monthly chart, we have the same higher high and higher low pattern. So now we have confluence from all of our time frames. The daily, the weekly, and the monthly chart are all screaming bullish. We are overextended on the monthly chart, even though we are just getting started here in the actual run. That doesn't bother me. And in big bullish conditions like this, I tend to discount RSI being overextended. And you can see here why. If we were looking to sell when this got overextended as an indicator, this would have been right at the beginning of the last bullish move, that exponential move, and we would have missed that entire thing. So one thing to know about the RSI is when things get aggressively bullish or aggressively bearish, you have to discount it a little bit because things can stay overextended for long periods of time. This indicator is much more helpful in slow, methodical markets or sideways trending markets. It breaks down and does not give very good signals when you really start to rip higher and when momentum really takes hold. You can see that same story played out back here too in 2019, 2020. We got overextended. And if we had sold when we got overextended there, we would have missed the far, far majority of that movement. Now, instead, this is where I like to switch from using RSI. RSI is normally my go-to indicator for momentum, but in these big volatility pushes, these big exponential bullish runs, I actually switch and rely more heavily on the MACD. This is the moving average convergence and divergence graph. And you can see here that we crossed bullish territory. This purple line is 0, and you oscillate back and forth over the 0 line. When you are above the 0 line with both the blue and yellow line, and the blue line is above the yellow line, that signals bullish. And you can see here that our MACD line was actually going parabolic and didn't signal a top until the actual top. And then it started to pull back some. We ended up eventually getting a cross right here that was a definitive cross. And that lined up with the breaking of the 9 EMA here, and then a bearish downtrend ensued. So right now, I am looking at this as saying, hey, we had an opportunity for the MACD to cross back over the signal line and give us some form of bearish indication to confirm the RSI signaling potentially a sell opportunity here. But instead of crossing, it came down and started curling, and it is curling right back up, signaling that there is another leg of this opportunity. Now, if we drop this back into a daily chart, obviously we've gapped up over the weekend. Yesterday, Bitcoin moved pretty heavily, and since it was a Saturday and the futures don't trade, we have a gap up situation here. I'm not interested in chasing that. I would really, really love to see this pull back and come back down into the 78,000 mark and allow me to get in around 78,000. I highly doubt that we are going to see that, because if we go back here and look at the last parabolic run, when it started to go exponential, it didn't pull back hardly at all. We would have 1 or maybe 2 days of consolidation. And then once we found the 9 EMA again, it blasted off and took off for its second leg. So right now, I am kind of looking at this as fairly similar. We have blasted off, gotten away from that 9 EMA considerably, and now I would really, really like to see it go sideways for 2, 3, 4 days, and then give us an opportunity to smash it come maybe Thursday or Friday. Going out to Ethereum, Ethereum for quite a while has been stuck in the absolute mud. And when it was down here underneath this diagonal, I had been saying the last several weeks, watch for a break of this diagonal and a pump to at least that 200 period moving average. And we have not only gotten that pump to the 200, but again, today on Sunday, we have gapped above it significantly. Now, I'm not going to probably chase this. I do have some longer term positions in the ETFs, but in terms of actual trading of the futures or adding to positions that I already have in the ETFs, I am going to be waiting, hopefully, for some kind of a pullback down into this 20 period moving average, or excuse me, 200 period moving average on the daily chart and looking for that bounce. So not going to chase it, but if we do get some kind of reprieve, then I'm going to smash that buy button. And really, it looks like this could go up to about 3,400 and then back up to 3,600 pretty easily as a catch-up trade. If we toss this out to a weekly chart, clear these drawings real quick, and you can see we've cleared all of the moving averages. The 9 is starting to cross back up against the 20. The 20 is starting to slow its downward momentum and starting to go sideways. Both of these will likely cross back above the 50 SMA here on the weekly chart soon, and it should be off to the races. Again, I think 24 to 26 is a good estimate for the short term. I don't see anything really stopping this from coming back up to at least 4,000. Going out to gold. Gold has been getting kicked a little bit here with the market picking up pace and the US dollar just going on an absolute tear. We ended up breaking our diagonal support here that we have had ever since July. We did violate that. We bounced back up and now confirmed that support line as new resistance here. So on the short term, this is not a great look for gold. Over long term, I'm not super concerned with it because gold is a great asset to hold long term. But for the short term, this doesn't look great. We need to have this get back above this diagonal support and resistance line before I will be interested in playing gold to the top side. If we do break down below 2650, that might be a short-term bearish downtrend, and I will be looking to more aggressively sell covered calls on any of my stock positions and generate some cash flow in the meantime while it kind of shakes itself out. Going out to silver, basically rinse and repeat, exact same thing as gold. We had our diagonal support and resistance line from a shorter term perspective right here. That one did get broken. We came up, kind of tested it, rolled over just like gold. But unlike gold, we have a secondary support line, our longer term support and resistance line that price is barely holding on to right now. And we have to see if that breaks and goes lower or if it actually holds as support. So right now it is a stay away and we are just waiting for clarification. Really, I'm not going to be bullish on silver until we get back above $33. Once we get back above 33, I think it'll be a quick trip back to 35 and then probably past that. Going out to copper. Copper had a really nice consolidation pattern here, holding on really tightly to its 50 period moving average on the daily chart. Had a fake out attempt. It tried to move higher, ended up just getting smashed lower. And right now we are just seeing a lot of volatility and it is hard to get a clear read on this. I will not be surprised with price doing anything between 4.2 all the way up to about 450 on the top side. Between that range, I think it is a stay away. Once we get back above 450, I think it is off to the races. Next target back up to 480 and then beyond. Going out to Palladium. Palladium had a really nice movement and then just gave it all up. We are currently sitting right on top of the all-important 200 period moving average on the daily chart. And if that holds, I could see a quick day trade or two coming back up into the 50 period moving average and the decreasing 9. But I'm probably going to be staying away from that. If this does break, it's lookout below and we have clipped our support level here on the diagonal support and resistance. We have moved below all but the 200 period moving average on the daily. So not a fantastic look. It did have an opportunity here to hold the 20 and move higher and really start an exponential run, and it just could not hold on to that bullish thesis. Going out to platinum, honestly, this is a mess. I'm not going to spend much time on it. It's been choppy, unpredictable, hard to read, and the MACD and the RSI are now in bearish territory, so I am not interested in platinum in the least right now. Going out to crude light, basically rinse and repeat. Platinum, not super interested in. If anything, I could see potentially a bearish trade dropping back down to 67.5. But I'm not probably going to be talked into this trade anytime this week. It probably needs another week at least to develop here and see what's going on for the bulls. And like I said, short-term trades, probably a breakdown below the low of this wick, which was 69.74. If we get below 69.74, it's a lookout below, probably coming back down to 67.5. Last futures chart, going out to natural gas. Natural gas is still down below its longer term diagonal. Nothing really to see on that. We have gapped up slightly over the weekend, so it's hard to play bullish, especially knowing that we have this longer term diagonal above us here, but hard to be bearish because of the gap up and holding the moving averages, improving conditions on the weekly chart. So what this means to me, I am looking eventually for price to come back up to around 3.6, but if we go back to the daily chart, really I want it to go sideways for a little bit longer, let this diagonal act as resistance for a few days, and then get confirmation in a break above it, and then playing that break above the diagonal. Last symbol here, going out to the US dollar, obviously have just been on a monumentous tear off the lows. We are right at that important diagonal resistance. And if we break back above that, that is not going to be great for equities or the metals. Really, really hoping to see this get rejected and have it come back down to 29 and simmer out. If we do break higher, that is going to throw a wrench into a lot of the other analysis. Going out from there, let's take a look at our heat map. This is a 1 week performance of the previous trading week. So looking at last week's data, and you can see money coming back into the market hard in pretty much every sector, except for some losses scattered out throughout healthcare and medical devices, and then beverages like Coke and Pepsi, things like that. So finally, last but not least, let's pop over and look at the week ahead. This is our Forex Factory calendar, looking at important data coming out for the market. Nothing on Monday and Tuesday. Wednesday, Thursday, and Friday are going to be an onslaught of all of this. I am very interested to see what happens for core CPI data on Wednesday, and also retail sales on Friday. I think those are going to be the two that really slap the market. Core PPI as well. The rest of them, I think we already pretty much know what is going on, and what Jay Powell is going to say, what unemployment claims are going to come in at. But the CPI data, the PPI data, and core retail sales are likely going to move the market significantly this week. So as always, guys, take care, trade safe. Let me know if you have any questions. Hit me up in the comments, and please give me a like and share if it helps you to approach your trading. It really helps me get the word out.